Hey everyone, welcome back to the channel. Thank you so much for being here as always. If you remember, we just recently did an episode about crypto venture capital with my friend Miko Matusumura as a general partner at Gumi Crypto Capital. Yes, it's capital. And really excited to have him back. So we're going to talk about the basics of VC because I think a lot of people might be confused about the different rounds and when you engage a VC. So Miko, welcome back.
Yeah, great to be here.
Awesome. Cool. So I think anyone who might not be familiar with you can go check out the other video. Let's just dive right into this and talk about the different rounds in VC. Could you walk through
Great.
maybe from your perspective and sort of at a high level what the different funding rounds are, and maybe when companies might engage with a venture capital company like yours?
Absolutely. So there are kind of rounds that are canonical. And what I mean by that is that there are rounds that are just foundational, really the foundational ones are seed and then series A, B, C, D, E, F, G, all the way down the alphabet, right?
Mm-hmm.
Those are the canonical ones. Now, the thing that happens is that in a struggle to sell as little equity as possible, a lot of founders find themselves in a situation where they kind of have to raise again and again. And so the thing that happens is that they don't want to create the optics of sort of Series A, right? Because Series A these days is getting bigger, right? So Series
Mm-hmm.
A can be up to like 10 million or more, these days. And Series A, the optics, A is kind of almost the new B or C. It's almost the growth round at that point
Mm-hmm.
because people are getting to product market fit faster. So because of that, there have become a whole bunch of things like there's like a friends and family round, which is sort of the super pre-seed. Then there's the
Yeah.
pre-seed, then there's the seed, and then there's other kinds of, there's also like pre-A and then there's A, so like there are definitely
Yeah.
mechanisms that enable people to kind of play with the optics, right? Because the optics are, hey, we raise Series A or this kind of thing, right? Because people have a lot of expectations about what that means and how much you're going to raise, right? And I think it is important. These are all like conventions, right? But it's very
Mm-hmm.
important because VCs define, their investment patterns around that, right?
Mm-hmm.
Sometimes, as a communication convenience, if you approach a VC and you're like, oh, we're raising a Series B, right? Like, let's say the way you did it was that you called your pre-seed an A and then you called your seed a B, right? You could end up with a weird conversation where the VC is like, we don't invest in Series B, and that's it. And it could be that your
Interesting.
valuation is still super low and you're still like a seed stage. And it's kind of like, well, you named them wrong and people aren't now understanding you when you talk. Right. So
Mm.
that's part of it.
Got it. So it's almost like the boundaries are a little bit blurred between
They are.
the different rounds, and what you refer to them as relative to your own company as a founder can affect how people think about it. I mean, the way that I see it, right, is that these sort of like the friends and family, the pre-seed and seed is like you have an idea that is compelling. You might have some IP already, you might have a product already. The seed is to help you get to the point where you can determine whether you have product market fit. Is that like a fair like assumption?
Yeah, that today, so these things do shift over time, right?
Mm-hmm.
And one thing that happens are things like uh capital efficient markets, so
Mm-hmm.
for example, things like the phone app market kind of
Mm-hmm.
helped to disrupt this kind of funding pattern. And I think now blockchain is kind of again causing disruption to the pattern, so
Mm-hmm.
now I think Series A has become really, really serious and mature, right? So I think by Series A, you're expected to have traction and at least the preliminary product market fit, obviously that means you'll have to have shipped product and you'll have to
Mm-hmm.
have like users and everything else, right? So that those are broad expectations, obviously, you know, the good VCs are pattern matching and good entrepreneurs are pattern breaking. So you're going to
Mm-hmm.
see counter examples of everything that I've said.
Yeah, the friction I think is where the beauty comes. I mean, in this type of relationship, when a company comes, say, I mean, we can use crypto as an example because I think a lot of people in this on this channel are really interested in crypto. Someone comes to a VC and they say, I have, it's basically an idea. There might be a proof of concept. What is the path like for them to garner investment? Is it all done in equity? Is it, if, I mean, obviously there are instances where there might not even be an entity to have equity in, like it kind of gets complicated, right?
Yeah. So in cases where there's no equity, like ideally there's some entity of some
Mm-hmm.
kind, right? So, and then you can kind of do convertibles like a safe note type of a structure,
Mm-hmm.
and obviously, increasingly popular and tokenized things are like token warrants, right? Because
Mm-hmm.
obviously if your idea involves a future token, the early stage investors don't want to miss out, so in a
Mm-hmm.
sense, token warrants are kind of like, well, if we do go that way, we'll take care of the investors, because obviously there is a shell game that gets played, right? Where it's sort of like, oh, pump tokens, dump equity, or dump equity, pump tokens, and so
Mm-hmm.
people can do all kinds of disingenuous things by like selling out of different pockets to different people, so we
Mm-hmm.
just want to avoid all that and make sure that, from our fund perspective, we just want to align with the founding team. Like we just want to
Right.
get paid when they're paid, and we just want to have the same things that they have, and we're happy to have the same lockups and everything else.
All that stuff. So how do you go about determining what amount of funding somebody could get? Is it all like a risk profile that you look at, or is it also like market related? Where could, how quickly can you capitalize on returns in a certain time period?
Yeah, it's absolutely a lot like how homes are bought and sold,
Mm-hmm.
right? Which is the strongest principles of valuation apply to selling a home. So, for example, comparables is a huge issue when it comes to selling a home and
Mm-hmm.
valuing a home, right? And obviously, the concept of fair market value is the super essential concept, right? So,
Mm-hmm.
essentially, that's exactly what the market will bear, right? So, and obviously the competition between venture funds creates really nice opportunities for entrepreneurs, right? Because they can basically have a multi-bid going on their house.
Right. That makes sense. And then when somebody, gets that funding, are there stipulations about what it can be used for, requirements for what that money can be used for, or is it very much a general purpose, or does it depend?
So broadly speaking, like there are governance mechanics that can be applied. I
Mm-hmm.
would say that the most general rule of thumb is that the money is for kind of broadly what you said it was for. So, generally there's sort of a use of proceeds in your pitch deck, right? And then, the idea of governance, sometimes there's, sometimes there's like a board seat or there's some kind of steering mechanism that ensures that things aren't going too off the rails, right? But
Mm-hmm.
broadly, because it's the same as what we're struggling with in DAOs and decentralized governance, right? Which is that people join together and consent to a set of rules. But the issue becomes, how do you then change the rules that everyone consented to, right? So in essence, when you invest, you're consenting to a set of rules, right? And the rules could be something like, we're going to spend the money on getting to product, and it's going to cost, half of it's going to go to development, the other half is going to go to servers and whatnot or whatever, right? And it could be, so obviously, like there's some things that are pretty clearly off road, like we're gonna take my family to Hawaii or whatever. But like, I think that broadly speaking, that kind of divergence is what governance is for, right?
Mm-hmm.
It's for basically improvement proposals, and it's for kind of approving those things, right? It's like, oh, it would be better if we move my whole family to Hawaii. Then it
Yeah.
becomes, okay, how long and how much will it cost, and what's the impact of the roadmap, and why are you doing that?
Yeah, and why? Yeah.
I hear the weather's nice. I
Right.
started taking up surfing.
That's a good point. I mean, good spam fried rice and other things like that, right?
Oh
Um,
yeah.
I mean, so also when you start to move through like the canonical series, alphabet, if you will. Are there certain toll gates where companies that go and they're consistently reaching for funding in like late rounds? Um, is there I guess, are there certain points at which a company can look and say, hey, we need more funding? Or as a VC who's already invested in a company, do you go to companies and say, hey, now might be the time for you to raise a little more to take things to the next level?
Absolutely. To me, all kind of startups is kind of about milestones and runway, right? So it's sort of
Mm-hmm.
milestone versus runway. And in a sense, the conversation between a VC and a portfolio company ideally is one where the portfolio company is kind of keeping their investors updated about their cash situation,
Mm-hmm.
right? Because the thing that a good investor will be doing is they'll be assessing kind of the appetite in the market, right? And because we're, as a VC, we're constantly getting pitches and we're constantly seeing what other investors are doing and what they're buying at what prices, right? So,
Mm-hmm.
it means that the VC ideally has a strong understanding of what the market will bear and when, right?
Mm-hmm.
So in essence, if we start to feel a crunch, it may be that we would advise a company, you should race now before it gets really dark, and the entrepreneur may be like, we'd rather deliver a milestone, then the negotiation becomes, well, when are you going to drop that, right? Because he's like, well, if he or she is going to be like, if we drop this milestone, the company valuation will go up, right? And it's like,
Mm-hmm.
yes and no. Like,
Yeah,
it could be that this upcoming crunch will just crunch your valuation regardless of what milestone you
what you ship.
deliver. So, so it's there's a tension there's a lot of hashing out. And ideally ideally there's some mutual trust, and the conversation converges.
Mm-hmm. And so then I guess the end product for the VC is obviously it's about the return on investment. It's about the also like projections of where portfolio investments might go. What is I mean, you don't have to give anything related to your own firm, but maybe if you could come up with like an average, like I feel like people think VCs like everything you pick is just a win. It's just win after win after win. It's like if this is this is a VC backed project, it's good in the market. That's not the case, is it?
Well, so there's a couple of things, right? Which is one of the things where that tendency can increase is if you're right about the big things,
Mm-hmm.
right? So, like, Gumi Cryptos Capital has the word cryptos as the middle word, and the question is like, were we right about cryptos, right? And so, like, broadly speaking, that's been very beneficial to our investment pattern, right? But I would say that if you want to understand kind of the portfolio returns, I definitely recommend Peter Thiel's book, 0 to 1. He talks
Mm-hmm.
about the power law distribution of venture returns, where basically there's one thing that returns the fund, and more. And then, in the case of Founders Fund, it was basically Facebook, and then basically all the other portfolio company returns added together kind of are about equal to that first thing, right? Based on the power law. We found a couple of things. We found that, like, we actually at the moment have a number of kind of what we call gumi corn unicorns, and we
Mm-hmm.
have a pretty deep bench, right? So in the sense that, like, we're getting surprising performance out of the middle of the pack. So I think we're not strictly power law distribution, but I think in a way what it suggests that we were too conservative. That's what it
Interesting.
suggests, right? Is that
Yeah.
we probably should have, as a fund, we probably should have made wilder bets, which would have produced more flat out losers and more like explosive winners. But, like,
Yeah.
I think it's okay. I mean, we feel proud of our work and happy to have done what we did.
That's awesome. Yeah. And so for like you mentioned this, there's in the name Gumi Cryptos Capital, you have an industry focus, right?
Yeah.
Is it common for VC funds to focus on industries, or is it also a strategy to be a very diverse fund. I would imagine you
It's
probably need more people on board to do that, but
yeah, it's kind of more rare actually
mm,
to make this style of commitment, right? Because it's sort of a bold commitment, and in a sense, it's not a it's ultimately it's a commitment to sort of a brand, right? So in
mhm.
essence, like you can always just sort of like mumble, change your name type of a thing, right? So that's
Yeah.
always possible to escape that destiny. And obviously the average venture fund life cycle is about 10 years, right? So in a sense, like by making a statement like that, you're basically saying, and it's really interesting because crypto moves really fast. So it's
Mhm.
interesting because one of the things that challenged us initially in thinking about the name is like, is the word cryptos even going to be meaningful in the kind of scope of time that we're imagining, right? So
Mhm.
it's a certainly a commitment to jump in like that and behave like that.
Awesome. Well, I mean, I'm all on board for that idea. That makes perfect sense. You mentioned something, the life cycle of a VC fund is about 10 years. Can you elaborate on that?
Yeah. So basically, if you think about like an average venture capital fund, typically what happens in a 10-year life cycle is that you pretty much start to achieve sort of significant deployment of the funds, between years 3 and 5, right? And
Mhm.
the thing that happens is that you start to kind of you start to understand if the partnership is working, right around in that same range. And typically
Mhm.
what happens is you start raising the next fund in that range. So, but the reality also is that, the typical VC model is that you create unicorns,
Mhm.
right? Or dodecacorns or whatever, icosacorns, whatever the case may
Yeah.
be. But like, if you do that, it's sort of, even with the acceleration of things like ownership economy and tokenization, it still takes a while to fully realize all the gains, right? So,
Mhm.
things can be like thinly liquid, which is why it's so important that we find people with the right motivations and we find people who are very dedicated to solving problems and who have uh, sort of a ability to this is kind of going to sound weird, but it's sort of an ability to stay dissatisfied,
Mhm.
which I think is I don't know. That's a mindset.
Hey, I mean, dissatisfied with your current results can be maybe a little bit not good for you mentally, but at the same time, it keeps you motivated moving forward and improving stuff. So I think it's a dual edged sword.
Yeah, I mean, if you look at the kind of like most popular icons of entrepreneurship, like
Hmm.
Elon Musk or people like Steve Jobs, like those are not satisfied humans. Like,
Mm-mm.
like they're very unsatisfied humans. Like they're constantly looking at what they have, and when I say what they have, it's not like their motivations are super interesting too, right? Like Steve Jobs isn't like, oh, I'm unsatisfied because I don't own enough houses. It's sort of like,
Yeah.
no, that is not what he's unhappy about. He's
Right.
unhappy that his engineers gave him a phone that was like 2 millimeters thicker than the one that he had in his brain, or
Right. Right.
Elon Musk is like, why am I not effing on Mars right now? Like
Hmm.
it's sort of like, it just bugs him. It just really
Yeah.
bothers him that's how things are.
Yeah. I think it's very interesting because as a in the world of venture capital, I'm sure like the person that you're talking to, the entrepreneur themselves, is a big indicator of, the idea has to be good, the market conditions and all those things have to be good. But I also feel like there's an intuition in who you're speaking to and what belief you have in them delivering.
Oh, that's the lion's share if you're early stage. If you're
Mm-hmm.
growth stage, that stuff doesn't matter, right?
Mm.
If you and it's kind of creepy to say this, right? But if you're growth stage and you have product market fit, you can even replace the founders, which is sort of a horrible and creepy thing to say and do.
Yeah.
We don't espouse that. Like we're kind of obviously part of it is just who we are
Mm-hmm.
as humans, but it's also stage related, right? Which is that they're, at that point, like they make returns to their LPs by doing whatever it takes, and if
Mm-hmm.
you have product market fit, it's to me that the thing that happens is this, right? Which is it's sort of who's sitting in the command chair of the rocket ship, right? And the answer is generally whoever was sitting in there when the rocket took off, right? Like
Yeah.
generally, right? Because the rocket's going so freaking fast that like, people aren't even going to get out of their chairs. It's like it's impossible, right? They're just glued down to their chairs, and that's what's happening, right? But like, it turns out once you kind of get into orbit, like you can actually shuffle the chairs around because you're like, we're in orbit, like everything's cool,
Yeah.
like you get out of that chair now, and it's sort of like, wow. I mean, it's a dark thing to talk about because like, generally that kind of stuff shouldn't happen. Nobody enjoys any of those types of things. We haven't had to deal with that. Like
Yeah.
fortunately, like all of our kind of founder entrepreneurs have just they've just been incredibly awesome, and it's never been this kind of big issue.
Yeah, but I mean, it's still nonetheless, it's interesting to understand what you see in that space. When you're trying to get something off the ground, the founder and the leadership is very important. And it's not to say that it's unimportant when you're growing, but when you have that foothold and you're kind of in the current, you can ride the market a little bit, which is interesting. But yeah,
Yeah.
no, Miko, I've learned a lot from this. I had a cursory understanding of a lot of these things, but I think hearing it anecdotally from your experience is very valuable for me and for hopefully everyone that was watching. If folks have another or any other questions about this space, it's like this idea I think actually came from our last video. People were asking like, I don't understand the fundamentals, so that's great. If you have other questions, I'm sure Miko, who was very generous with his time, would come back and we could have another chat again. So let us know in the comments what you think on this. But Miko, thank you so much for being here yet again, my friend.
Yeah, absolutely. And, I just want to caveat this a little bit, which is, I'm 3 years in,
Mm-hmm.
and I think in some ways, like the timing is always opaque. So like,
Mm-hmm.
the timing to create a crypto VC fund turned out to have been quite good. So, but I would say that I have more experience doing entrepreneurship, and, I'm
Mm-hmm.
3 years in on my first general partnership in VC. So,
Yeah.
it's a sort of been a limited time,
Yeah.
and it's better. It's always better to be lucky than to be good. So
No doubt
I
there.
know some things, but I'm
Yeah,
still
no, I think
learning.
it's good to share knowledge, particularly from someone who is seeing this at face value almost in near real time, which is good. There's a level of abstraction and maybe like cognitive bias that comes the longer you've been involved in something. So yeah, no, much appreciated. Everyone who's watching, thank you so much as always. I will link up another video here, maybe the last video that Miko and I did about venture capital and crypto, if you have some time to stick around. But until next time, cheers.